The Dow's now, we'll call it flat, but after being up. And we have this meeting taking place in Brussels today among some of the European countries trying to grapple with what's happened in Nord Stream. Helima, what's your expectation at this point?
I mean, look, I think we had a market that was fearing Powell more than Putin. And I think now there's an assessment that we could be looking at, potential significant supply disruptions as we go into the, remaining months of this year. I mean, the Nord Stream 2, mysterious, pipeline sabotage, those were gas pipelines, but it's really leading to concern that European energy infrastructure is not secure. So everyone is, contemplating what could come next in terms of disruptive events.
In terms of price, though, what do you think is fair value? What do you think we're going to be seeing over the next couple of months? And therefore, when you think about buying into the energy complex and even equities, which have risen, obviously, remarkably, do you say that this is in the right place, wrong place at this point?
I mean, two key dates to watch. First of all, next week we have a key OPEC meeting. There's some discussion right now that we could see an OPEC cut coming next week. Numbers that have been tossed around are potentially 500,000 to 1 million barrels. That would be a sort of circuit breaker for those who believe that OPEC was not back in the market as a regulator. So watch what happens next week with that OPEC meeting. But again, really watch what happens come December. I keep stressing this point, but that is when the sixth package of EU sanctions kick in. The first time we have significant sanctions on Russian oil, embargo going into Europe, sanctions on moving barrels to Asia with shipping and insurance services. That will be a very important inflection point. And also the U.S. SPR release, that blockbuster release, is going to be tapering off soon. So if you look at this market, you would say, on the supply side, we should be getting tighter. The question is, what do the demand concerns look like?
What do you think it looks like 12 months out, 18 months out? Because I think there's a lot of folks who are buying equities now, and those equities have moved, as you know. And the question is, are they overvalued? Are they still undervalued? Is there still opportunity there?
I mean, let's take a natural gas, for example. That has been the market that we've seen the most explosive growth in terms of energy. One of the real concerns is that Europe has been able to build inventories in part because they had Russian gas for most of the year till we got these cutoffs. What happens in terms of natural gas storage in Europe with no Russian natural gas going forward? You are going to have an extremely difficult time building storage in 2023. So Europe may be able to get through this winter if it's not, unseasonably cold. But what's going to happen in 2023? So this could be, in terms of natural gas, a multi-winter crisis.
Is there any downside risk at this point in your mind?
You've
given us the upside. The upside looks on the price of this.
The downside risk is, do we have a global recession that leads to significant demand destruction or fear of demand destruction? So that is a non-trivial, headwind for oil. Obviously, the lockdowns in China has been a problem for oil as well. So this is the remainder of the year. Is it going to be Powell or is it going to be Putin that really pushes the market?